Welcome back to Alara Voss XRP, your go-to channel for breaking crypto news, deep insights, and everything you need to stay ahead of the market. And today we have a massive update that is shaking the XRP community and the broader crypto space in a very real way. This is one of those moments where multiple storylines are colliding all at once. Regulation, institutional adoption, and macroeconomic signals. And when you zoom out and connect the dots, it starts to look like something much bigger is unfolding right in front of us. We're talking about actions happening behind the scenes, powerful institutions making moves, and statements from Jerome Powell that are raising serious questions about where the financial system is heading next and how assets like XRP could fit into that future. So let's start with what just happened, because this is important, and it flew under the radar for a lot of people. The Independent Community Bankers of America, the ICBA, officially filed a letter to regulators pushing to deny trust bank charters for companies like Ripple and Circle. This didn't just come out of nowhere either. We've been seeing a steady pattern of these kinds of filings, objections, and pressure campaigns aimed at slowing down or outright blocking crypto-native companies from gaining deeper access into the traditional banking system. Whether or not they succeed is still up in the air, but the intent is very clear. They're trying to stop these firms from becoming fully integrated financial players, and that alone tells you how seriously they view the threat. And here's where things get even more interesting. Because at the same time this is happening, we were supposed to get the latest version of the Clarity Act released to the public this week, and that didn't happen. That delay might seem small on the surface, but in reality, timing is everything right now. There's a very tight window to get this legislation passed, and if it doesn't move forward soon, we could be looking at it getting pushed out entirely, especially with political cycles and midterms coming into play. This isn't just another bill either. This is the framework that could finally define how digital assets are treated in the United States, and that's something the industry has been fighting for since 2020. Now let's talk about the tension building inside the crypto space itself, because it's not just regulators versus crypto anymore. There are disagreements happening within the industry, and one of the biggest flashpoints right now involves Coinbase. We're seeing reports that even the CEO of Tether has suggested Coinbase should step back from its fight against parts of the Clarity Act. That's a big statement, and when you look at the numbers behind it, it starts to make more sense. Coinbase has a massive financial relationship with Circle, especially through USDC, and that relationship generates a huge portion of their revenue every single year. To put that into perspective, Coinbase is pulling in roughly $1.35 billion annually from its partnership tied to USDC reserves, and that represents a significant chunk of its overall business. When you realize that nearly 20% of their revenue is connected to this, you start to understand why they might be pushing back so hard on certain regulatory outcomes. This isn't just about ideology or what's best for crypto as a whole. It's about protecting a very profitable revenue stream. And that's where frustration in the community is starting to grow, because people are asking whether these decisions are being made for the industry or for corporate balance sheets. What makes this even more intense is that Coinbase has now been linked to blocking the Clarity Act not once, but twice. Back in January, support was pulled at the last minute before a key markup, which caused the process to collapse. Then again in March, there was a White House brokered compromise that could have moved things forward, and once again, it was rejected. When you look at this pattern, it's hard not to see a deliberate effort to stall progress. And that has major consequences for everyone involved in crypto, not just one company or one token. And if you're an XRP holder, this situation probably feels very familiar because it echoes something we've already been through. Imagine fighting a legal battle for years, dealing with uncertainty, delistings, and non-stop criticism, only to come out on the other side with a favorable ruling. You'd expect that to be the turning point, right? But instead, just as the legal clarity is about to be solidified into law, something outside of that original fight steps in and blocks the path forward. That's exactly what this moment feels like for many in the XRP community right now. The Clarity Act itself is incredibly important because it goes far beyond just one issue. It defines whether tokens are commodities or securities, it protects developers, it reinforces self-custody rights, and it gives regulators like the CFTC clearer authority. This is the kind of structure the industry has been asking for, and it actually passed the House with strong bipartisan support, which is not something you see every day. A 294 to 134 vote shows there is real momentum behind this, but momentum doesn't mean anything if it gets stalled at the next stage. And here's the part that really stands out. The entire fight right now is centering around stablecoin yield. That's it. One feature that doesn't even apply to most users is holding up a massive piece of legislation that could shape the future of crypto in the United States. Banks want that yield restricted, while companies like Coinbase generate hundreds of millions, if not over $1 billion, from it. So what you're seeing is a battle over a specific revenue model freezing progress on everything else, including areas that would benefit the entire ecosystem. Meanwhile, Ripple has been taking a very different approach. While all of this is going on, they've been building quietly and consistently, focusing on compliance from the ground up. RLUSD was designed without the kind of yield complications that are causing issues elsewhere, and Ripple has continued to expand its presence within major financial infrastructure systems. We're talking about involvement with institutions connected to the DTCC, relationships with major banks like BNY Mellon, and ongoing central bank pilot programs that position them right at the center of where the financial system is heading. There's also a growing sense of urgency here, because if this legislation doesn't get passed soon, it may not happen at all this year. Once political focus shifts toward midterms, priorities change, and bills like this can easily get pushed aside. That's why you're seeing more voices speaking out, including Senator Lummis, who has openly stated that the Clarity Act is one of the most important developments for DeFi and the broader crypto space. According to her, this is about finally giving developers, validators, and operators the legal certainty they need to innovate without fear. At the same time, there are ongoing discussions at the highest levels about what fair financial access should actually look like. We're hearing arguments that consumers deserve better interest rates, more competition, and access to tokenized assets that can be traded quickly and securely. These aren't fringe ideas anymore. These are conversations happening in mainstream financial circles, and they reflect a shift toward a more open and efficient system where blockchain plays a central role. Even major institutions like BlackRock are openly talking about a future where tokenization becomes a core part of the financial system. Their head of digital assets has made it clear that while it's not guaranteed, the probability is high enough that they're making significant investments based on that belief. And when institutions at that level start positioning themselves for a tokenized future, it's not something you can just brush off. These are calculated moves backed by research, capital, and long-term strategy. What's even more fascinating is that while all of this is happening, public attention on crypto is actually at very low levels. Data shows that retail interest has dropped significantly, which usually happens at the worst possible time. Historically, these are the moments when major infrastructure is being built behind the scenes, when institutions are accumulating positions, and when the foundation for the next phase of the market is being laid. It's a pattern we've seen before, and it's playing out again right now. At the same time, you have massive organizations like the NASDAQ, the DTCC, and the New York Stock Exchange all exploring or actively working on tokenization initiatives. Central banks are moving forward with digital currency plans, whether at the wholesale or retail level, and financial institutions across the board are preparing for a system that looks very different from what we have today. And yet, many everyday investors are stepping away simply because the market isn't moving the way they expected in the short term. And then we get to Jerome Powell, whose recent comments add another layer to this entire situation. He pointed out that when you adjust the data, There is effectively zero net job creation in the private sector right now. That's a serious statement, and it signals underlying weakness in the economy that could lead to major policy shifts. When traditional systems start to show cracks, that's often when alternative systems gain traction, and that's exactly where blockchain and assets like XRP come into the conversation. So when you step back and look at everything happening at once, the regulatory battles, the institutional positioning, the delays in legislation, and the macroeconomic signals, you start to see why people are calling this a bombshell moment. It's not just one headline or one event, it's the convergence of multiple forces that are all pointing toward a major shift in how value moves, how markets operate, and how financial infrastructure is built going forward. And whether people realize it yet or not, XRP is sitting right in the middle of that conversation. And that's where we're going to leave it for today, because there is a lot more developing, and we'll continue to track every piece of it right here on Alara Voss XRP. If you made it this far, you already know this isn't just noise. This is the kind of information that shapes how you think about the future. Stay sharp, stay informed, and I'll see you in the next update.